Hello, everybody, then, and welcome to this recorded webinar. It is the 24th of January. It's 6 p.m. We're diving in. I hope the sound is good. I hope the vision is good. And nice one, Rory. Well done. First trade today for an age plus 65. Should have stayed in better. Well done, anyway. Well done. Okay, so tonight I'm aiming purely at mindset. Not going to do anything regards education on charts, etc. It's all about mindset. I have a chart there, but really it's just so you can see something. That's all. We will be looking at the gates system as well, because that is mindset, though you may not think it. So welcome, everybody. If you do have a solid question afterwards, I would like you to unmute and ask it so that it's available in the recording for everybody. In the meantime, I'm reading your chats, I'm keeping an eye on them, and thanks for those. Here we go then, diving in. What you imagine, your subconscious will try to make it real. Some of the words I'm going to read out to you now, there's some notes I've made. It's mindset, it's motivation, it's a lot, and it's all on one page, so bear with me. I must not fear. Fear is the mindset killer, the slow and small death that delivers total obliteration. I will face my fear, allowing it to pass over and even through me. When the fear has gone, there will be nothing, no emotion, but I will remain steady. I will follow my dream, and though I may stray, I will return to it. Tired? I will rest. Fall or trip, I'll get up and keep going. I may make a mistake, get angry or cry. I will rejoice in this and focus on my dream. Ideally, I will learn from those mistakes. And then it happens one day. You just wake up. You wake up and you're in this place, this space in your mind where everything just feels right. Your heart and your mind are just calm. Your thoughts are positive and your vision is clear. You're at peace with where you've been, at peace with what you've been through. Most importantly, you're at peace with where you're going and what you're doing. It's not because you had a winning trade, not even because you had a winning day. But you now understand what it is you're doing and how to do it properly. You finally learned what it was you most needed to know. How do I know I'm not in the zone? Emotion. Once I feel an emotion, hope, fear, anger, doubt, I'm not engaging with the chart. I'm engaging with my fears, my needs, my wants. Once I feel emotion, I know my next action will likely be a rule break. Hope is for things outside your control. Trading is not outside your control, as it's a result of your own actions. Bringing us right back then to rules. The main use of rules is to protect you from bad habits. You need to stick at something, and this, by the way, is scientifically proven. You need to stick at something for a full 66 days before it can become a habit. Learning to drive is the same as learning to trade. It is as much of a learned skill. Driving is the same as trading. Trading is the same as driving in pretty much every way. There is an analogy for every single part of the process, of both processes. All of us want to be in trades all of the time, and we'll enter too early or too late or too often. So we want to see the pattern or a setup. An entry rule will help to protect you from early or late entry. Overtrading is a type of rule breaking too. All overtrading is as a result of either bad rules or ignoring rules. Rule following at the beginning is tough. There is a payoff for following a rule, although it might not be immediate. All rule following needs time to show an effect. All rule following is painful at the start. All rule following will at times cause you to miss out. How many of us are following our New Year's resolutions? Rules do not have to be the same for everyone. They are mostly to protect you and your area of weakness. A preemptive entry is a weakness, and so you have more solid entry rules. We need them. After a while, your brain, if it sees proof of the rules working, will accept them and they become part of you, your habits. Just exactly like it is when you come to drive. Your rules and the rules, for instance, of, say, who's a Formula One, Michael Schumacher, assuming he's still going, or Nigel Mansell, or any of those, these fancy Formula One race drivers, the rules you obey and the rules they obey are different, but they're still rules. You will become more intuitive, or at least it will seem that way, in your trading, as your rules will just be carried out by your subconscious. A rule you don't follow is using a stick to beat yourself with. If you don't follow it and you lose, you feel stupid, with good reason. If you win, you question the rule until you break it again and lose and feel stupid. A rule is something that you can clearly explain to another human being. I don't fight the trend. I don't fight an indicator. I don't fight trend lines, and I don't trade when I'm not emotionally engaged, when I am emotionally engaged. For example, they're a selection of my rules. So if you can't explain it, then it's not much use to you because you don't understand it properly nor its purpose. When we come to drive, we understand the rules of the road, don't we? All of them, or we wouldn't drive. Or if we would drive, we'd probably get fines and points and lose our license and cause problems on the roads for other road users. So we understand those rules. Likewise, we should understand the rules on the charts. Sometimes we look at a chart and it's rangy and we might need patience. Sometimes something is the wrong colour, it hasn't this, it hasn't that. We should wait. We shouldn't just think, oh, well, it'll happen in a few minutes. I'll go in now, early. We don't sit at the traffic lights and think, oh, they're going to go green in a minute. I'll just go now. We wait, don't we? It should be the same when we look at the charts. Now recently, and I've got this chart open for a very specific reason, recently Netflix lost big on earnings, as you can see from the gap. I don't understand people holding, or worse, whole position holding through earnings or pullbacks. Earnings are a roll of the dice, as is holding through a pullback. There is a way to predict the size of a pending move, but it does take a lot of practice and experience. So, like this, you're going into a predictable news event or a pullback over which you have absolutely no control. You're tossing a coin. You are probably not a hedge fund. I'm going to mute you. Oh, you've done it, Michael. Okay. You're probably not a hedge fund with 100,000 shares, so you are in effect illiquid. Why hold? My thoughts on an explanation are greed or FOMO, fear of missing out. Your job, in inverted commas, at the charts, it's not about being right. Your job, in inverted commas, is to make the safest possible choices that suit you personally, you as an individual, your risk tolerances, the safest choices in accordance with your risk tolerances. Some people should be as skittish as a deer approaching food left by a human being. It might be okay, but you might get shot in the face. Discipline, then, is crucial. Entries are a predictable event where you can get shot in the face. The market is always communicating with you. All of that, all of it. It's just my take on the matter. But I've been here at this for a long time. I have, and I use lots of different analogies to get the points across, usually. But I think so far, all I've said is pretty clear. Now, I'm going to take time to demonstrate the gates system again and share the rationale behind its use. Because many people forget, like, the goal isn't really money. The goal is to spend your days as you choose. Consistency, then, really, is what I'm looking for. Consistency. And that means if you're going to bank three, bank three, bank three, if price moves against you 3 pips, you should close the trade and take the -3 on the chin. That's consistency. But bank three, bank three, bank three, and oh, let a loser run to -15 or -20. That's not consistency. That's not a consistent approach at all. I've prepared the standard gauge sheet here. This one, the small money and the usual, what's that called? Aggressive entries. And I've prepared this one, a less aggressive beginning, if you like. Okay, I believe anyone can start with that kind of money. That means if you stake initially 50 cents, 50 pence, whatever it is, whatever your currency is, I'm going to say cents and I'm going to refer to these as bucks then, because whether they're euros, pounds, rand, Australian dollars or regular dollars, a buck's a buck, isn't it? So if you start with 50 cents and you manage to get yourself through 32 positive pips, and bear in mind that could be +5, +7, +9, -6, +12, plus, I don't know, 9. We might be there by now. 36, great. You've reached a gate with one loss. If you lost 15 pips out the gate, if you had, for instance, a -5, a -10, boom, that's -15. You cannot increase that stake. You just cannot. It's not doable. It's not allowed. It's impossible to increase your stake if you make a loss there. Okay? So if you do manage to get through gate 1 and you manage a positive 32 pips, you can increase your stake. We've suggested doubling here. And if you manage to make another 32 pips or more, they don't add to the next gate, by the way. If you manage 64 pips here, it doesn't mean you automatically jump to gate 3. No, you've just got extra money in the bank over here and you move to gate 2, to gate 3, to gate 4, and so on. You must hit at least 2 point something times your risk to be able to move forward. The amount in this column in pips must be more than 2 times the amount in that column. So 15 and 32 is a sensible level to look at. And then wherever you get to before you make a 15 pip loss, let's assume you make it to here. You've gotten to gate 8 and you've lost 15 pips. So you're at gate 8 and you have +2472 in the account and you lose. If you lose, you will lose 375 bucks. You have to halve your stake, which means you go back to 12, which means if you lose 15 pips, you will lose 180 bucks. And you have to halve your stake. Now there isn't a 6, so you have to go down to 5. So if you lose 15 pips at 5 bucks, you're losing 75. And if you lose there isn't a 250, so you'd have to go all the way back to 2, so you're -30. And if you lose there, you have to go to 1, so you're losing 15, and then you're losing 750. Now you've had 1, 2, 3, 4, 5, 6 losses back to back. You were up to 2472, but by halving your stake each time you take a loss on the chin, you've still got more money than you had at the previous gate. Note here, you have more money than you had at gate 7. So what happens and how do you move forward? It's simple. You make 32 pips at 50 cents, which means you get that plus 16. And then you make 32 pips at a buck, so you get that plus 32. And then you get 32 pips at 2 bucks a pip, so you get that plus 64. So you're working off a bigger base. And I don't care if you manage to make it to gate 20. Let's assume you make it to gate 20 and you have 39,272. If you take a loss, it'll be 1,500 bucks, which means you're back to the Stone Age, all the way back here, halving your stake, and you will risk losing 750 bucks. And then you'll risk losing 375 bucks. And then you'll risk losing 180. That is right, isn't it? Half of that one. Yeah, 180. But then you're back to the 75 because there isn't half of a 12, so it's 5. You lose the 75, you lose the 30, you lose the 15, and you lose the 7.5. And what does it do to our account? It protects the capital in our account. We don't step back one financial gate. There is absolutely, yes, losses are inevitable. Abso-bloody-lutely, we can lose. And you all heard me, what was it, January 13th, I think I took a trade in the webinar. I lost 10 pips. It happens. That was the first loss I'd had since October. But they do happen. Didn't get upset about it, didn't get worried about it. I closed out at the 10 pips. The stop loss was 15 and I closed out at minus 10. For me, that was the right thing to do. But that's me. I looked up. We've got a picture in our group there, and because I just transferred everything over from WhatsApp to the other platform, there was a thing there, and it says the type of animals in trading. And I looked at it, and there was one, a stag, and that reminds me. Yeah, that reminds me of me. What did I say about a deer in the headlights, or a deer taking food that was left by a human? Yeah, I'm neither bullish nor bearish. I'll take the trades as they present themselves, and I'll lock in where I see fit. I'll get out when it looks like it's turning. I will run with the money. Time after time, I will run with the money. So we have a gate system here, and yes, that column is editable big time. These columns are editable, but if we reduce that number or increase that number, then we need to reduce or increase that number and keep track. That should be more than 2 times that, at least as you can see in this case, by a little bit. The other thing that we should use to keep us safe is something like this, a daily trading plan. Try and make that a bit bigger so it all fits in there and you can see it all. A daily trading plan. And that should keep us honest to the extent that we know what time we're going to be at the computer and what days we're going to be at the charts, when we're going to trade. We're going to know what it is we are choosing to trade, and all of this is editable. We're going to select here what times between when and when will we be placing our trades. And that means if we've said that by 8 o'clock, we're going to trade till say 11, if we place a trade at 10:59, what the hell were we thinking? Why would we do that? We're not going to be there in 120 seconds, are we? We're quitting at 11. Why would we place a trade at 10:59? We need to stick to the rules that we set for ourselves. We must, if we're going to do anything resembling trading with discipline. It would be like saying to, Lewis Hamilton. Here, Lewis, you normally drive a Mercedes, do you? Okay, well, there's a mini metro. Race that around the track. See if you can get in front of that guy with this thing. What? It's not going to happen. Unless he's on Top Gear and he's doing something crazy kind of, starting a reasonably priced car kind of effect. There are rules, and the rules have to be equal. And it's only going to be equal rules if everybody applies them in the same way. Absolutely, some people will have rules that suit them, and they're not going to be the same as yours. They will be playing percentages, and that's okay. That's great, so long as, and as I've written down here, you see in the obey the rules section below here, we can't change that. Down here, look, follow only valid and strong signals with the trend ideally, using the rules defined in your chosen strategy. Now, if you're the kind of trader that's going to let a trader run against you, that's okay. you're probably hedging. Maybe you'll admit to hedging, maybe you won't. Maybe you've got a big enough bankroll or a small enough stake to carry it through the loss and to take it when it comes back up. In my early days, I've done exactly the same thing. In my 2004, 2005, yes, I entered oil sometimes and it would pull against me, and I'd think, okay, it's come down a bit. I'm going to go in again. I did exactly the same thing with what was it called? Admiral Insurance. I read something in the shares magazine, it was going to go up, it was underpriced, it was this, it was that, it had reasons it was going up. And I placed a trade and it trickled down a bit. I scaled in, trickled down a bit more, scaled in again. I'd gone in initially at like £10 a pip, and by the sort of, I think it was week 3, I was in at £100 a pip, and it trickled still some more. I was just about to go, oh no, this is beyond my comfort level, I'm closing it. Because I'd been scaling in, it wasn't huge money. If it was £100 a pip, I was probably on the back foot for about 15, 17 pips there or thereabouts, which in those days wasn't terrible for me because I wasn't as knowledgeable as I am now. But within 2 days of the week after, it was in good and decent and fair profit, and it continued to rise, and I did very well off that Admiral scaling in, if you like. It was my very first ever venture into scaling in, and my first venture outside of trading oil, because back then I only traded oil. I've developed a wealth of experience since then, and a wealth of rules and a wealth of knowledge. I'm big enough and grown up enough to know that different people will apply different rules, and rightly so. Absolutely. You know, if I go out for a drink with my wife, Kasia, and I'm drinking a pint or a neat whiskey or something, yeah, she's not going to keep pace. One of us has got to drive. So if I'm drinking, she's not. We're going to follow different rules. So regardless that you might think, oh, that's totally different. What are you on about? It's about following rules. It's about setting and understanding rules, whether they're spoken, written, or not. Maybe they're just in your head. Most of mine have at some stage been cast on paper and then in my mind cast in stone, and I know them off by heart, so they're no longer printed up in my office. However, if I go and I rattle this piece of paper, I can read out to you, it says daily trading plan, and it's mine. And it does say by then, till then, and it's changed since then. I've changed the times. That's it. They're allowed to change, but so long as I know the change, that's okay. And it goes open, charts open, news checked. Then observe MTFA, multiple time frame analysis charts for combo trades. I want a combination signal, and you all know what that means. I want high probability, low risk, and you all know what that means. On this piece of paper it says 3 FX pairs plus UK 100 and J30. That's changed. As at these days I'm trading Euro, Dollar and NAS generally. I will occasionally venture into the UK 100. I enjoy it, it's fine. We've got a very good reason for trading it, haven't we? Thank you, Paul. And it does say then written, handwritten, check the 2 a.m. level. And then daily that says, and then underneath it, Thursday and Tuesday evening, check the US 30 open level. I don't really bother the US 30 anymore, but I still check the levels just because I am programmed to do that now. I programmed myself to follow those rules. Why did I do that when I'm not even going to trade the market? Because other people do, and I like to keep a finger on the pulse. I might go back to it, so there's no harm in following those rules. I drive an automatic these days, but I still take a manual out now and again just to remember that, yeah, you've still got to change gear sometimes, you know? Keep your hand in, as it were. Remember the rules, as it were. You know, we can program our cars these days, and Cash's one is already kind of pre-programmed. It has the speed limit for where you are, flashes up in a big dial, and in the what's that called? Not the cockpit. What is it in the car? On the dashboard, the speed limit flashes up right there, right next to the speed in digital letters. So you've no excuse for breaking the speed limit. Now, when we look at our charts, and we can have a glance at our charts right there, okay, that's still Netflix, and yeah, there's a gap, but look, it's heading down. We all know what our indicators are. It's unlikely that was showing anything like buy mode. So if any of mine were selling that, and there's only you, David, that really is interested, but somebody did mention it in the group. Mark, you mentioned it, I think. So, that was an anticipated event. It was a predictable event. We knew there was earnings, and earnings, as we know, can create gaps. When we look at a chart like this one, we know about patterns: X, A, B, C, W. Yeah, we know about those. We know about fractals, be they bullish or bearish. We know about support and resistance. We know about big round numbers and how they can create support and resistance without the need for adding a single indicator at all on the screen. So we are generally a mile ahead of the group, really, or the herd, let's say, or we should be within this group at any rate, be a mile ahead of the herd. Why? Well, because we've got better indicators, generally. We have. I've yet to see anywhere anyone else using indicators that beat anything like what we've got. Is that English? Like what we've got? It's very Liverpool, isn't it? I'll take it on the chin. I've yet to see anyone anywhere that has anything resembling our gates system, that is, as you can see, firmly designed to let you take 6 losses back to back, 1, 2, 3, 4, 5, 6, 7 losses back to back, and still maintain your capital balance. At any point in time, our strategy is designed, our gate system is designed to protect your capital. Let's assume you only make it to gate 2 and you've got 648 bucks. You've got to gate 2. Whoop-de-doo, you've got 648 bucks in the account. You move on to gate 3, you're aiming for the 712, but you lose 15 pips. Minus 15. Bump. You've now, oops, I've got to go plus in there, haven't I? Escape. F2, home, plus. You've now got 633. Well, you've still got more than you had at gate 1, which was 616. So it's designed to risk less than you just made. Risk less than you just made. Risk less. Risk less. Risk less. Risk less than you just made always. That's how the gate system is designed to keep you financially safe. That's what the gate system does. I think it's amazing. It's one of my greatest inventions. It even beats that bloody electric engine that Queen's University had on about with me. That's the deal. This, I think, is better than that. Why? Well, because so far it's made me more money than I can ever imagine making from the bloody the engine. That's just an idea for the minute. I'm still talking with the university about it. Neither here nor there. But look at that. You're risking 1.25% of your initial account. You're risking 93.7% of what you've just made. You're risking 2.3% of your overall bank. It gets ridiculous when you get down here. You're risking 11% of your overall bank with that. Actually, where is he looking at? B8. B8. No, okay. Yeah, you're risking 11%, if you like. But it's of money you've just made. You're risking broker money. It's not your money anymore. That was your money. Once you get there or to gate 2, you're not trading your money anymore, and it's not at risk anymore. That is meant to eliminate the fear factor from your trading. That's what it's meant to do. That's why we created the gates. I spoke to one member once, it was a long time ago now, and he was saying, yeah, made this many pips, oh, made that many pips, made this many. He was making pips. We were having a one-to-one one time, and I said to him, so you must be substantially up now. What are you trading per pip? Oh, I'm still only trading 10 cents a pip. What? Why is that now? Oh, I just didn't ever bother with the gates. So from day one, like what are we, 3 months in, and you've got how many, 400 or 500 pips on the table? You're trading 10 cents a pip or something stupid like that, and you're 500 pips positive. Yeah? Okay, you're going to have to explain that one to me, I said, because I'm struggling now to wrap my head around that. Why would you do that? Why wouldn't you gate, even slowly, 10 cents, 20 cents, 50 cents a pound? Why wouldn't you do that? Why wouldn't you do that? Well, I just, well, he gave me his best Scooby Doo then, didn't he? I don't know. And often, that's what we hear. And you can give it to me all day. You can give me your best Scooby Doo. I'll take it. I don't know. It's just funny after a while. But you don't have to do that. You really don't have to do that. You could imagine that you're a profitable, well, you probably, a lot of you already are. You could imagine that you were a disciplined trader without fear and without emotion. That's what you should imagine. I am disciplined and I have no fear nor emotion. That's what you should be imagining. I remember getting stopped for speeding once. I was going into Tullow. It was in, not this car I've got now, it was an older Jaguar I had. And it drops from being in kilometres 100 zone right down to a 50 zone. I've no idea why they do that, but that's what the speed limit did. What a load of crap. Next thing, there it is. Okay, so I pulled over and I stopped, and the guy, there was a car in front of me actually as well, and the guard stopped us both. We have guards here, not policemen. He stopped us both. He came to me first because he was, I don't know why he came to. I was at the back. He came to me and he said, "Okay, what was that about?" I said, "Oh, I'm really sorry. I'm listening to this language thing. I'm learning a new language. I'm following the guy in front of me. Paid no mind at all to the drop in the speed limit. I just kept up with him. Really sorry about it. It's it is what it is. And where are you going?" "I'm just going Tullow there. I've got a factory in there. That's where I work." Like, so obviously you can imagine how long ago it was. And he said, "Oh yeah, I've seen you there. Go on, off you go." And he let me go. And as I was pulling around this other car, he pulled his ticket book out, and he had a pen in his hand. I thought, poor bastard there is getting a ticket. I didn't get one. I wonder why I didn't get one. I think it was because I was honest enough and blatant enough to say, "Yeah, sorry about that. I know I was going some. Yeah, sorry. Take it on the chin." And I was going to take the points, which he didn't give me. Now, there was no emotion in me, no fear. "Oh, please don't give me 3 points," or, lying. "Oh, no, I wasn't, and you're wrong." No, I just took it on the chin. It is what it is. Losses are inevitable. Travelling at twice the speed limit is going to get you points. It's inevitable. There are rules. When you follow them, you are exempt from danger. That's the reality. Absolutely exempt from danger. Yes, you will still take a losing trade. Yes, absolutely. If you think you won't, you're wrong. It happens. It happens to me. I'm at it since 2004. I still take a loser from time to time. It happens. But that's okay. It really is okay. All you've got to do is stick to your rules and don't be drawn into anything resembling road rage, because that's the equivalent of, revenge trading. "Oh, I lost 10 pips at this much money. If I go in at that much money, I'll be able to get that back in only 3 pips or something." That's not what we do. That is not how we behave. If we take a loss on the chin at any level whatsoever, we halve our stake every single time. And if we can't halve it, if we can't go from 5 to 250, well, we halve a little bit. We err on the side of caution. That's what we do, because that's how we protect our capital. And if we follow those rules that we discussed over here in the daily trading plan, if we follow those kind of rules, which means using the rules defined in your chosen strategy, and most of you have those written up. If you haven't got them written up and printed out, then you should remember them. Just right off by heart. As much as you would if you went to church and you know it, like the Lord's Prayer, or if you sing carols at Christmas, you know the words to "Away in a Manger" or something. Whatever it is you know off by heart, that's how well you should know the rules as defined in your chosen strategy. As well as you know your children's names and dates of birth, for instance. Or better, if you've more than one child and you get them mixed up, you need to know your rules better than that. You shouldn't be getting mixed up at all, ever. There is no excuse, none. There is no reason. There's no Scooby-Doo. There's nothing. Nothing that is acceptable. You must know your rules inside out, back to front and sideways. Then you can start placing trades. You should be doing it on demo to the extent that you've got a 70-30 win rate and a 1.2 times hold percentage, as in if your average loss is 10 pips, your average gain should be 12 pips. On demo before you even risk real money. And then if you have a bad day on real money, that's okay. It's okay to have a bad day. It's okay to have a bad trade. If you're having a whole bad day, by the time you get here where you're taking a 3-strike rule on the chin, as in, oh dear, I've made 3 mistakes, even if one of them made you money, that's when you should be thinking about reaching out. Maybe it's to your trading mentor, maybe it's to your trading coach, maybe it's to your trading therapist. But you've all hopefully by now read the trading code 2, and you all know that there are those 4 horsemen. That's a good one. I like that. Way in divergence. Wait for the indicator. That's brilliant, Luke. I like that. Brilliant. We'll find the rest of the words to that. I'll tell you what, I'll get together with you and we'll write that song. That's bloody brilliant. I like that. I think we should share that with the group. When we finish the words, you and me, because you've started it now. We've started, so we may finish. I think it's brilliant. Now, I've pretty much covered all that I wanted to. There's one passage I want to read again to you guys because this is real. It really is how it can be. I don't know if anyone was ever a soldier, you ever in the army ever, and about face, squad, turn, and it's all cockeyed and left when you're butting someone in the face and going the wrong way and getting kicked up the arse because you're doing it wrong. But then it just happens. One day you wake up. You wake up and you're in this place where it all makes sense. This space in your mind where everything just feels right. Your heart and your mind are just calm. Your thoughts are positive. Your vision is clear. Remember when we're looking at my charts and I say I am a combination of Mr. Bean and Forrest Gump. Mr. Bean because I sit in the corner and I look at the pictures. Here is a picture I might find myself looking at from time to time. Sitting in the corner, it just happens that my computer is in the corner and I'm looking at the pictures. Just like Mr. Bean in the movie. And Forrest Gump, because what is your sole purpose in life, Gump? Whatever the hell you tell me to, drill sergeant. And you all know who the hell my drill sergeant is when it comes to looking at these charts. And that's it, I will listen to him. So your thoughts are positive, your vision is clear, you're at peace with where you've been and what you've been through. Most importantly, you're at peace with where you're going and ideally what rules you're going to follow. That's where you need to be. If you want to do this consistently and professionally and be a VIP, a versatile, independent, professional trader, that's where you need to be. You need to be at peace with what you're going to do. Not because you had one winner, not even because you had one huge winner or a winning day. It's now because you understand what you're doing and how you're doing it and why you're doing it. You've learned what it was you most needed to know. And remember then, to be in the zone, you need to dump anything resembling any emotion. Hope, fear, anger, doubt, greed. You're no longer engaging with the charts. You're engaging with your emotions. In that case, get a cat, a puppy or something. Hug it, cuddle it. That's emotion. Enjoy it. That's what that's for, by all means. Hope is for things outside your control. Trading is not outside your control. It is a result of your actions. So when you don't see the setup, wait. And all. When it looks hell of a rangy, wait. Leave it alone. You all saw the posts in the group, I think it was Friday, when someone said, what do you do with the Dow when it's like, how do you trade the Dow when it's all choppy like this? What was it he wrote exactly? Does anyone know how you would trade, I think it was. And I wrote, yes, don't. In big letters, don't. Don't trade. If it don't look right, don't trade. If in doubt, stay out. At the end of the range, at the end of the problem, two things are possible. One, you'll have missed out. Okay, I don't have a FOMO, fear of missing out. I don't have that. Two, you won't have lost any money. Those are the only two things that are possible. FOBCO, I have a big one of them, a fear of being caught out. I have a massive fear of being caught out. Sure, I grew up in Liverpool. Everyone's always trying to catch you out there. You know, it's funny, it's hell of a funny, but the joke's on you, and it's not that funny when it's always on you. So you're not easily caught out. That's the reality. You know, and I'm happy to take stick about being from Liverpool. No problem, I'll just laugh it off. It is what it is. I agree. The guy selling me tyres one day said, "You need to take them wheel locking nuts off that Volvo," my wife's car. The wheel locking nuts, they fail, and you'll end up roadside one day. You won't be able to change the wheels, and you'll be stuffed with a puncher. And I said, "All right, yeah, do it, but wait, because we're going to Liverpool at the weekend, and so we'll change the locking nuts when we get back." And he looked at me like I was joking. I said, "No, I mean it." You know, I grew up there. I'll change the locking nuts when I get back there. If you're putting new tyres on it, there's no way I'm going there without locking wheel nuts. And we laughed at the good of it, you know. So, lads, I've kind of got through all I wanted to. Does anyone want to unmute and ask a question? I've read through the comments and I like that away in Divergence. Luke, that's brilliant. Anyone want to say anything? Add anything? No? Give you the moment. Otherwise, I'm going to end the recording and we'll say happy days. We're back on in the morning, 9 a.m. for our trading webinar. I'll place this recording straight in the group for you all right afterwards. Nobody got anything? Don't be shy now. Unmute and say it. If you think I'm speaking nonsense, by all means, unmute and say it. You can't be kicked out the group for it. You're challenged. I say, question everything. How often do I say it? Question everything. John says, "Can you pop that spreadsheet on the group?" Yes, John, you already have access to it, but yeah, I will. It should be in your trading folder. If you go in here, where are these? Where it is? If I go, desktop trading. Here's the trading folder. If I go in trading, it's in more, and it's called R2R simulation. It's that one. And then there's the new gates and margins one as well. But I'll drop it on the new group now. Okay, I'll drop that one straight away there. No problem at all. All of the documents I show you ever, they're all available. You know, be it a PDF, the books that we talk about, the trading code 2, all of that is available in your trading folder. But yeah, absolutely, I will stick it on the group. No problem. All right, thanks for that, Michael. Everyone, what is it? We'll do a sort of a countdown to the next minute if you like. I'll give you another chance. If you want to say anything, by all means, I'm wide open. Otherwise, I'll quit it early and I'll get the recording uploaded, and I'll see you all in the morning. Are we happy, campers? Cool. Thanks, Rosa. Thanks, everybody. Cheers, John, Michael. I'll call it a day there then, and I'll see you in the morning. Thanks, everyone.